Hello there, this is James and you're watching Tixee Live, and a very happy Friday to every single one of you. In today's program, I want to have a little chat about the US dollar and have a look at how it's been this week. And then I also want to look at the Swiss franc, because that's looking extremely interesting, especially the euro Swiss franc. And obviously, it's the end of the week, it's Friday. I'll do my usual weekly recap of all the events. But before we get to that, don't forget, these little videos are for educational purposes only, and in no way whatsoever should ever be treated as financial advice. I always suggest you do your own research, do your own due diligence, and of course, know the risks of hand before entering any trade. With that out of the way, let's get started. Okay, first of all, this one I've called Another Week, Another Dollar, because like I said, I want to talk a little bit about the Greenback today and how it's been this week, if it's had a good week, bad week, medium week, etc. But before I get to that, there was a couple other things which happened today, a couple of more statements. At the moment, the market is always listening out for comments and statements for forward guidance. And today, Fed's James Bullard, he came out and he said, households in the US are in a great position to spend going forward, because apparently a load of households have managed to save a load of money during the COVID lockdowns. So I'm not quite sure how he actually knows that, to be fair, but that's one of the things he said. So basically saying, they can handle increased interest rates because they have savings. Okay, so that was a bit of a funny statement. He also said, if everything goes according to plan, inflation, of course, will come down. Right, okay, that's nice. And finally, he did say that interest rates, or he wants interest rates at 3.5% by the end of the year. That has often been the sort of tone of the Fed. I think we've all expected interest rates to be around 3.5% by the end of the year. So the initial impact, how the market is closing out this week, is quite calm. It's actually quite calm. And we can see that by looking at the US dollar, okay? Because the dollar's had a bit of a mixed week. And I'll pull up my charts to sort of show you why it's had a bit of a mixed week. So let me show you, for example. Now, this is against the US dollar Swiss franc, okay? So as you can see, currently as it stands, the US dollar is heading to close lower against the Swiss franc. This is obviously the dollar yen, which is the one sort of success story it has had slightly. It's currently trading now 135.07. Okay, but if you look against some of the majors, like if we look at the Aussie dollar, okay, again, it's set to close slightly lower against the Aussie dollar. Okay, if we then look at the Kiwi as well, look at the Kiwi, we then can see the Kiwi is again looks set to close lower against the Kiwi. And even with the euro, okay, the euro, even though they say the euro is capped currently at that level we've been looking at, 105.784, and it's quite range bound as it stands. The euro actually opened this week at 105.716. Okay, so again, we're trading now at 105.200. So again, slightly higher, it's a slightly weaker greenback. And if we then also look at the cable, British pound, US dollar. Okay, yes, we're still stuck in that range with a potential resistance at 123.15 and a key support at 121.97. We're still stuck between that range. But the sterling opened this week at 122.1 122.16, and we're currently trading at 122.79. So yeah, in general, the greenback has had a bit of a mixed week. Okay, it's performed well against the yen, obviously commodity prices, but that's a different story. But against the majors, it looks set potentially to have its first weekly decline in this month. So we could end up lower, the first decline for the US dollar this month. So that's how it stands currently at the moment. In other news, in other things, on the plus side, world stocks are set for their first weekly gain in a month. Okay, because don't forget, we've had weeks and weeks of declines in the stock market. And if we can have a look at, again, look at my charts and have a look at the S&P 500, which is always a good indicator for risk appetite. As you can see, it's currently trading at 3,826 points. 3,826 points. It actually started the week at 3,687. So yes, it does look set to close the week with its first gain within a month. If you look at the Nasdaq as well, Nasdaq's a similar story. Okay, we started around this level here, and again we're closing higher, or look set. We could potentially close higher currently at the end of this week. So currently it's trading at 11,809 points. So yeah, there's a little bit of optimism. Not a lot, a little bit of optimism. And I'm not saying that this optimism is gonna stay on to next week. I think the reason why we're seeing a slightly better week for stocks and a slightly weaker dollar this week is for two reasons. One, I think the market is absolutely exhausted after last week's turmoil. Just don't forget, last week the stock market had its biggest loss, a weekly loss since March 2020. So don't forget that. But I think the other reason why we're seeing a teeny weeny bit, a couple of gains across the board, is because of the commodity market. And as we know, those who joined me this morning, as I discussed, copper is down 7%, and the red metal is a big indicator for demand because it's an industrial metal, and that's getting slaughtered. But it's not just copper. We've had falls in oil, falls in gold, falls in silver. Okay, oil in particular is particularly important. And the reason why there's a teeny weeny bit of hope, and that's why we're seeing a bit of gains, is because there's hope that in the fall in commodity prices will put the brakes on runaway inflation. Okay, that's what they're thinking. If we can see a further fall in commodity prices, then the inflation can possibly be controlled, which means that the central banks won't necessarily be too aggressive with interest rates. And if we have a quick look now at some of the commodities we're talking about, let's have a quick look, first of all, at the red metal, or copper. My West Country accent. As you can see, look, it's still very much pressured, currently trading around 8,306 points. Gold is still within this very tight range of $1,828. It actually fell below that, and that level now is potentially acting as a potential resistance. But yeah, like I say, it's now really trading around there. So yes, it's been under pressure all week. Silver's the same story as well. Currently trading at $20.94. So again, pressured. Oil, okay, is trading slightly higher today, but it's a lot lower than it started the week. It's currently trading at $105 a barrel, and Brent is currently trading at $109 a barrel. Yes, it's had a bit of a buying in today, but it's a lot lower than it started the week. Okay, so that's what the market is thinking. The market is thinking that if we could see a further fall in commodity prices, then yes, indeed, we might be able to control inflation, or better, get a grip on inflation. And that means the central banks may then be less aggressive with interest rates. So that's what we're seeing currently at the moment. Now, there's something else I like to talk about, and that is the Swiss franc. And that, as you know, continues currently to go from strength to strength. That was driven mainly by the SNB when they raised interest rates, surprised the market and raised interest rates over a week ago. And now the big question is on everybody's mind is Euro Swiss franc. Can it go to parity? Can it go to parity? Let's have a quick look at it now. So let's bring up, like I said, we've always seen, if you look at we already looked at the dollar Swiss, we can see the Swiss has gained a fair bit of strength against the dollar this week. So Swiss is performing very well. But if we look at the Euro Swiss, we're currently trading at 1.0059. 1.0059. So parity is not out the question. Parity is not out the question. So there is a good chance for the Euro Swiss could go to parity. So yeah, parity, of course, you know what I mean by that, 1 for 1. So it'd be 1.0000. So yeah, the market and many analysts are thinking potentially it could go to parity. So that's going to be very interesting to watch over the next coming trading sessions. So what else? There is some more data coming out today worth keeping an eye on. And that, of course, is the US home sales. Remember, I talked a little bit about it yesterday, earlier on this morning, sorry. Now, like I said, I did discuss, when I did the Canadian CPI, I discussed the potential housing crisis in Canada. It'd be a good idea to keep a new home sales and keep an eye on the US housing market as well, because obviously with interest rates going up, property mortgages are more expensive. So we need to keep an eye on that. Don't forget, the last time the US had a serious property crisis, the whole world fell into a global recession known as the credit crisis, which was horrendous back in 2008. So I'm not saying that's a story at the moment, but I must say, just keep an eye on it. I'll be interested to see how that turns out, and maybe that might develop into something a bit more in the next couple of trading sessions. So new home sales due in about 45 minutes time, actually. Okay, it's the end of the week, and I do my usual weekly recap. And again, it's been another exciting week. And as I say every week, I'm exhausted, but also excited. So let's do a recap of what this week has brought us, okay? And it's mainly one thing. Inflation fighting talk. That's what we've had a week of. On Monday, I discussed it, and it was a lot of Bank of England members who came out quite hawkish. Sanders was one of them, saying she agreed with having a 50 basis point rate hike on the next BOE interest rate decision. And a couple of few members, even Hugh Pill, he was a little bit hawkish as well, in reference to what the Bank of England should do next. So we had a little bit of inflation talk, fighting talk, as we began the week. Then of course, Tuesday, we had the dreaded R word pop up again. Recession talk sort of impacted the markets a little bit, and the markets got scared again. Then on Wednesday, the markets felt a bit calmer. Okay, But the reason why it was calmer, because it was waiting for more inflation fighting talk. And that, of course, was from Jerome Powell, who started his testimony to Congress. Around the same time, we had consumer price index for the UK, which came in at a new 40-year high at 9.1%. Then we had Canadian CPI, which came in at 7.7%, which was a 39-year high. And then we had more Powell talk. And this time he said his fight against inflation was unconditional. He's determined to bring down inflation to their target of 2%. So we've had a lot of that. And then today, oh, no, hang on, there was something else as well. Don't forget, there was something else. Hi, hello, sir. How are you today? I'm very good, thank you. It's Friday, and it's, it's always good, but I'm very good. Thank you for saying hello, sir. Thank you. So like I said, and then, what was it? Yesterday, the Germans activated phase 2 of their emergency gas plan. And we had a chat about that and how that could potentially affect German industry and manufacturing. In fact, the German governor of economics, he has also mentioned that some companies, some industries may have to shut down if this gas problem continues. So that is a real developing story. So we have to see how that develops next week. And finally, today, markets in a slightly more optimistic mood because of the fall in commodity prices we've had this week, and the hope that can maintain the brakes on inflation, which means more softer interest rate hikes. So that's the week. What a week. Another exciting week. But don't forget, we've got another exciting week coming up. And these are the key events for next week. US durable goods, Bank of England's Governor Bailey speaks, German CPI, US GDP, German retail sales, US initial claims, UK GDP, EU CPI, and US ISM manufacturing. So another exciting week ahead. And I hope you can join me next week for those events. As the market, as it stands, like I say, it looks like it could end its first week in over a month with gains. Euro Stoxx currently trading 1.54% higher. The FTSE is currently trading 1.80% higher. And the DAX is currently trading 0.78% higher. So everybody's going to end the Friday, depending, of course, what happens in the US session. We get any breaking news. But it looks like we might end this week in a fairly good mood, which would be a nice, refreshing change. Don't forget, you can ask me questions anytime you like, whenever I'm online, or just say hello, like that gentleman just did, which is nice. So feel free to ask me questions whenever you wish to. Don't forget, if you can't think of any questions at the moment, but you think of them later, put them on the comments, either on YouTube and Facebook. I will see them, and I will reply to that question next time I'm live on air. Okay? So anyway, that's going to be me for the week. I think there's no questions, so not a problem. Not a problem. Don't forget, I'll be back online on Monday at 8 a.m. UTC, and again that afternoon at 1 p.m. UTC. So please come and join me for that. And remember, like I always say, if you're watching me on Facebook and you like it, by all means, give us a follow. If you're watching me on YouTube and you like it, by all means, subscribe if you like. Hit the notification button so you know next time I'm going live. If you found this little video interesting and helpful, and you've put up with me being enthusiastic and loud, give me one of those. And it's nice to know that you like it. But anyway, till then, don't forget, these little videos are for educational purposes only, and in no way whatsoever should ever be treated as financial advice. I always suggest you do your own research and do your own diligence. There you go, said it. And of course, know your risks at hand before entering any trade. Till next time, every single one of you, trade safe.